Hi, my name is SaTonya Ford, and I am branch manager and loan officer for PRMG, that is short for Paramount Residential Mortgage Group. Today, I'm going to be talking about the loan process. We're going to be talking about getting approved, getting processed, and getting closed. I'm going to tell you a little bit about me. I've been in the mortgage business since 1999. I've worked as a loan originator, loan officer, branch manager, mortgage broker, mortgage banker, loan counselor. I've worked on the banking side, the mortgage side, every side of the mortgage industry pretty much. So now I am branch manager and loan officer as well. I am wanting to give you some time to go get pen and paper so you can take some notes. And I'll see you in a minute after this. Okay, so let's get into it. Once again, my name is SaTonya Ford. You can write my information down while you got your pen and your paper. My email address is sford, that's SFORD, at prmg.net. And by the time you get completed with this segment, you can be able to apply if you feel that you are ready. And you can go to your search engine and type in sford.myprmg.net and click on Apply Now. And I'll see you soon after this. Okay, so the first step is the loan application. You will need to seek out a loan officer before you seek out a realtor, okay? Because you are going to need to be approved or pre-qualified or pre-approved for the particular price range of a home. But first you will need to be pre-approved for your loan. So what we're gonna do is go over the first page of the loan application, and we're gonna ask you for, if you're a U.S. citizen, we're going to ask you if you're a permanent resident alien, a non-permanent resident alien. We are going to need to prove by documentation that you are by providing 2 forms of identification. Make sure that those 2 identifications match with your first and last name. If your last name does not match, for instance, if you've gotten married during the COVID or gotten divorced during the COVID and you're going through a name change and the Social Security office in your area is not open, but you've changed your driver's license at the revenue office, then go ahead and provide that, but provide documentation or marriage license or divorce decree. Okay, so that's number 1, 2 forms of identification. You are going to need to prove you're married or unmarried. If you're trying to go through the process and you are married and you're separated, then understand that based off of whatever state you are in, your husband may have to come to the closing table. So make sure you do the research and find out what's required in your state. Because if you want to purchase a home and your name is connected with someone else's by marriage, then you want to go ahead and do the research. If by chance it won't hinder you from purchasing a home, but you want to find out from the beginning what the process is going to be like, so you can make whatever decisions you need to make. Either you can have your husband come to the closing table and sign on and then sign off, or whatever paperwork needs to be taken care of in order for you to solely own the property by yourself, if that's what your intentions are. Okay, so on the loan application again, we are going to need resident. What is your current resident? Make sure that your pay stubs and your W-2s match up. If it looks like you live one place and your pay stubs say another thing, and your W-2 is going to say another thing, then it's going to conflict, and the underwriter is going to question that. So we are going to ask for letters of explanation. We do understand that sometimes when a person is not does not feel as stable, it depends on what kind of situation they just come out of. Sometimes you could already have your address be your mom's or your parents' address for years and never changed it. We're going to need to know and explain those things, because we need to make sure that you live at the property that you say you live at during the time frame. And we are going to need to cover 2 years, okay? All right, so as far as that, we are going to need to cover your employment. Now, on an FHA loan, we are going to need 2 years of resident. If by chance you just gotten out of college and you just got a letter that you just got hired a place 3 months ago or whatever the case may be, then you can provide college transcripts. Other than that, we will need 2 years of employment and 2 full years of employment, because we will need your W-2 for the 2 previous years as well. During the year of tax time, if by chance the expiration date on filing taxes, we will need the W-2, but just so happen we will need the 2 previous years. Just say, for instance, this is 2020, 2018, 2019. Whether you file your taxes or not for 2020, we'll still need the W-2, okay? If by chance you want to use overtime, commission, or bonus, it has to be 2 years of both. Base salary, hourly employee, overtime, bonuses, commission. We got to make sure that you have been receiving the extra income on your pay stub, either with that particular company. Maybe you just started one job and you just started making bonuses, but you were making bonuses at the last job. Long as it's 2 years consistent, okay? And we will be able to use additional income. Assets. We need to make sure that it's 2 months bank statements. And the money that you've saved in it cannot come from student loan. It cannot come from PPP. It cannot come from small business money. Anything government, you cannot use for a down payment or closing costs. What can be allowed is savings, checkings, money that you saved up from payroll or whatever the case may be. We can allow tax refund money, stimulus money, and we can allow 401k, IRA, or anything of that nature. So that can be considered down payment and closing cost money for purchasing a home. When you want to purchase a home, also, we will allow gift funds. Gift funds has to come from a mother, father, brother, sister, boyfriend, girlfriend, baby mama, baby father. It could come from those various places because that's an immediate family member, and we do feel that they are not going to ask you for the money back. So anything that looks like it could be borrowed money, and we would consider it a debt. Say, for instance, if your cousin gave you $2,500 for you to close on a home, we kind of understand that your cousin wants their money back. So we also ask for the person to provide a 30-day bank statement so we can prove that they had the money to give you. And we want to make sure that it wasn't a loan that they took out for you, because if it was, they probably will have you to pay the notes monthly. And we will have to include it in the debt screen. Any property that you already own, if you receive lease agreements on it, we will calculate and you utilize that accordingly. So we will want to receive lease agreements or whatever the case may be. There are new questions on the loan application as well. The loan application is going to ask you, are you going to live in a house? Because if you are, it's considered primary resident. If you're not going to live in a house, it's considered investment property. Investment property is when you have to pay a bigger size down payment at closing. The next question is this a purchase transaction? Do you have a family relationship or business affiliation with the seller of the property? If you do if you're purchasing a property from a family member or a employer, then 9 times out of 10, they're going to ask for 20% down. Are you borrowing any money for the real estate transaction or obtaining any money for another party, such as seller or realtor, that you have not disclosed on the loan application? That's very important that you share that information. Have you or will you be applying for a mortgage loan or another property on or before closing this transaction that is not disclosed on the loan application? Will this property be subject to a lien that could take priority over the first mortgage lien, such as a clean energy lien paid through your property taxes? In other words, don't be behind on back taxes. Try to be current on your taxes before making applying for a mortgage if you currently own a home. Are you a co-signer on any debt or loan that is not disclosed on this loan application? That's very important, because if you are a co-signer and that particular person that you co-sign for, if they're paying their own debt, then we can exclude it from the debt screen, as long as you can prove that they are the person that's paying the debt for the last 12 months. Are there any outstanding judgments against you? That's very important as well, because that will have to be paid for at closing or on or before closing. Are you currently delinquent or in default of any federal debt? Things such as, for example, do you owe the IRS? That's important to know, because with a FHA loan, you have to have a payment arrangement with the IRS, and you have to have 3 months payments already in existence, at least. Have you conveyed title to any property in deed of foreclosure in the past 7 years? Within the past 7 years, have you completed a pre-foreclosure sale or short sale whereby the property was sold to a third party and the lender agreed to accept less than the outstanding mortgage balance due? Have you had property foreclosed upon in the last 7 years? And that's just some of the loan application. Now let me go over the documents, documentation, the what and the why you will need certain things to get through the process. And I will be back to you soon. Now that we've taken the loan application, it is time to pull credit. Of course, we need your verbal permission, or you can give it to us in writing. And by the way, this information that I'm sharing with you is good for people in 48 states, all except Wyoming and New York, okay? So every other state other than New York and Wyoming, we can take a loan application for, okay? So what we're looking for with the FHA loan, of course, the middle credit score needs to be 580. With that 580, we are looking for certain things, like 3 trade lines. 3 trade lines is such as debt that's reporting to the credit report, or creditors that's reporting to the credit report. But we're looking for 12 months of payments that have been made on time with a 12-month pay history, okay? So by chance, say for instance, it could have been a car, 2 credit cards. As long as it has a 12-month pay history, that's what we're pretty much looking for. Also, we are able to exclude a few things, and maybe like charge-offs that's been 2 years old. It could have been a repossession. As long as it's 2 years old and it's charged off, we can exclude it from the credit report and move forward. Medical debts is something beyond your control, so we do look over medical debt. We exclude that as well, and we will allow about up to $1,000 in collections. What I would like for you to do is, instead of seeking out a person for credit repair, talk to a loan officer first to see if there's any debt that needs to be paid. The lender looks at credit repair as manipulating credit scores to defraud the mortgage industry. A lot of times people go out and seek out because they may have had hit a rock in the road or whatever the case may be some years ago, and they don't feel that they can move forward. Again, we will allow charge-offs for 2 years that are 2 years old charged off, and collections up to $1,000, and we will exclude medical debt. So remember that. So seek out a loan officer before going to credit repair. So now we're going to talk about the things that you're going to need for documentation. I'm going to talk to you about what, and I'm going to talk to you about why. Okay, we're back, and we're here to talk to you about documentation now. We're going to go over the what and the why. And the documentation is because we need everything to match up with what you told us on the loan application, because the underwriter is going to review it and the processor is going to verify it. So we're going to start all over with the 2 forms of identification. Remember, I told you, in reference to the 2 forms of identification, if the last name does not match on 2 legal forms of documentation, it's going to be either because you just went through a divorce and we're going through the COVID situation, or you just got married and we're going through the COVID situation. Okay, and we'll need 1 month of pay stubs. That means if you get paid weekly, we'll need 4 pay stubs. If you get paid bi-weekly, we'll need 2 pay stubs. If you get paid semi-monthly, then we need 2 pay stubs. And if you get paid once a month, we need 1 pay stubs. Remember, throughout the whole process of doing the loan up until closing, we will continue to need a pay stub, just like clockwork, until the loan is closed, to make sure that you're still receiving income and you're still working on a job. Okay, now when it comes down to bonus, commission, or overtime. Okay, we're back, and we're here to talk to you about documentation now. We're going to go over the what and the why. And the documentation is because we need everything to match up with what you told us on the loan application, because the underwriter is going to review it and the processor is going to verify it. So we're going to start all over with the 2 forms of identification. Remember, I told you, in reference to 2 forms of identification, if the last name does not match on 2 legal forms of documentation, it's going to be either because you just went through a divorce and we're going through the COVID situation, or you just got married and we're going through the COVID situation. W-2s. If the loan officer does not ask for tax returns, do not provide them. Okay? And we'll need 2 months of bank statements. 2 months of bank statements. If you have 5 bank statements or 5 different banks, make sure you only give us the bank statement that you are receiving your payroll from, and or the bank statement you have your savings. That's pretty much the only thing we're interested in, is your budget, how you budget your finances, and how you're saving. And we want to make sure you have the money for closing. Those are the things that we're looking for. If by chance you have an NSF in the bank statement, don't provide that particular one, or just wait another month. Okay? And I'm always one of the type loan officers that try to find strength for the file. So if you have a retirement, IRA, any additional assets that's somewhere else is considered savings, I would ask for the 2 quarters, the previous 2 quarters statements for the 401k. That would help strengthen the file, and you don't want to look like the bank statement may have just the money for closing. You don't want to look like you just spending all of your money at closing at the table. So if somehow you end up in a hardship, we do know that you have money to fall back on, and that's called reserves. If by chance you filed a bankruptcy, this won't apply to everybody, but just in case it does. If it's a Chapter 13 or a Chapter 7. A Chapter 7 wipes away the debt, and we will need a Schedule A through Schedule J from when you filed. It has the case number. And we'll need a discharge letter. The discharge letter is going to have a discharge date. And when you file a Chapter 7, we are going to need to look at the date, because you cannot apply for a loan until the 2-year anniversary date of the discharge letter, and that's on a Chapter 7. On a Chapter 13, the discharge date could say yesterday. Well, 1 day from the Chapter 13 discharge date, you can apply for a mortgage loan. Chapter 13 is when you consolidate the debt and it's paid in full. Discharge means you pay as agreed. Dismiss means you did not pay accordingly. So we are looking for a discharge letter, and you can, on a Chapter 13, apply for a mortgage the next day after the discharge. And we will need a Schedule A through J, and that has the case number. Okay? Now, if by chance you want to use additional income, like child support for a child, as long as it's court ordered by way of divorce or child support order, and the pay history has been consistent for the last 12 months, and the child is under 15, the documentation that is needed is the child support order, the child's birth certificate, because we got to prove that they're not going to be 18 in the next 3 years, and a pay history of 12 consecutive payments for the last 12 months. We will need that information in order to utilize the extra income. Awards letter. If by chance a child or someone in the household that lives in the household that is on the loan, or you're overseeing, is receiving Social Security, disability, or retirement, and you want to utilize the income, then we will request an awards letter. We will need all pages. Normally it's 1 or 2 pages, front and back or whatever. We will need that along with a birth certificate if it's for a child, so we can make sure that the child won't be 18 in the next 3 years. My name is SaTonya Ford. Once again, I am branch manager and loan officer at PRMG, that is short for Paramount Residential Mortgage. You can email me at sford, that's S-F-O-R-D, at prmg.net. And if you feel that you're ready to apply with the information I just shared with you, you can type in your search engine sford.myprmg.net. Thank you, and I hope to do business with you soon.
Any ideas?